Good day, I'm Divya Lakshmi. Alongside with my teammates Durga and Idris, we'll be presenting about the financial analysis of Nestle Berhad. Good day, I'm Divya Lakshmi and I'll be presenting our financial analysis of Nestle Berhad. We analyzed 3 years of performance covering 2022, 2023, and 2024. We used key financial ratios to evaluate liquidity, efficiency, profitability, solvency, and market outlook. Our findings show that Nestle has remained strong in profitability and continues to deliver consistent dividends. However, it also faces challenges, especially in liquidity and rising debt levels. Overall, the company is a stable investment, but growth opportunities are limited as it operates in a mature and competitive industry. Because of this, our recommendation is to hold Nestle shares, which makes the company more suitable for investors looking for stability and steady income rather than aggressive growth.
Hello, Miss. My name is Idris bin Abdul Aziz, and I'm going to be presenting introduction as well as the company overview of Nestle. So, to start off, Nestle is one of the world's largest food and beverage company, headquartered in Vevey, Switzerland, and established in 1866 by Henry Nestle. It has become a global leader with operations in more than 180 countries. Nestle has evolved from a small dairy producer to a diversified multinational company serving almost every segment of the fast-moving consumer food industry. Nestle's core activities revolve around producing and marketing a wide range of food and beverage products. Such examples are like beverages like Nescafe, confectionery like Kit Kat, pre-made food items like Maggi, uh, health and nutrition products, pet care products, and so forth. Moving on, Nestle's position within the industry is very big as it has consistently positioned itself into ranking as the largest food and beverage company in the world by revenue and market shares alone. It also has a diverse portfolio which allows it to serve up multiple categories of customers ranging from the mass market to the premium. Not only that, it also has a very prominent market presence in the fast moving consumer goods food industry, making it a top dog in the industry. Some of their most recent developments and strategic initiatives of Nestle include committing themselves to renewable energy and recyclable packaging as one of their initiatives to increase their financial performance. So for this initiative, in their packaging, they try their best to simplify their designs, make lighter bottles, and make their packages more recyclable. Not only that, but they also are trying to help in involving themselves in trying to make renewable energy for the world so that they can consistently sustain themselves within the industry. Though the recyclable packaging it may be a bit costly, but it's important for consumer preference and environmental awareness. Other than that, they are also emphasizing on organic sales growth to increase and maintain profit margin. They have initiated a strategic cost cutting program, also known as Fuel for Growth. This initiative has helped Nestle in improving margins as well as fund innovations. It is expected that this initiative will accelerate decision making as well as product development.
Hi everyone, I'm Sai Durgashri, and today I will be presenting and interpreting the key financial ratios of Nestle Malaysia for the years 2022 to 2024. These ratios helps us understand the company's liquidity, profitability, operational efficiency, financial leverage, and market valuation. Let's start with liquidity ratios. The current ratio measures Nestle's ability to meet short-term obligation. It decreased from 0.71 in 2022 to 0.55 in 2024, indicating slightly reduced short-term liquidity. The quick ratio, which excludes inventories, remained low at around zero point 0.2, showing that Nestle relies significantly on inventory for its short term liquidity. In summary, while the company can cover its immediate obligations, liquidity has slightly weakened over time. Next, we have profitability ratios. Gross profit margin stayed stable around 30 to 35 percentage, indicating consistent operational efficiency. Net profit margin decreased from 9.3 percentage in 2022 to 6.7 percentage in 2024, reflecting higher costs or lower revenue growth. Return of assets fell from 17.5 percentage to 11.4 percentage, showing reduced efficiency in using assets to generate profits. Return of equity dropped from 99 percentage to 75.9 percentage, largely due to lower net profit and high leverage. Overall, Nestle remains profitable, but profitability is gradually declining, especially in 2024. Activity ratio measures operational efficiency. Inventory turnover increased from 3.75 to 5.22, showing improved inventory management. Receivables turnover decreased from 17 to 13.9, indicating slower collection of receivables. In a sense, Nestle is managing inventory more efficiently, but cash collection from customers is slowing down, which may impact cash flow. Debt ratios highlight financial leverage. Debt ratio increased from 68 percentage in 2023 to 74 percentage in 2024, meaning more of Nestle's assets are financed through debt. Debt to equity ratio rose to 4.96 times, slowing very high leverage. Interest coverage decreased from 14.8 times in 2022 to 7.5 times in 2024, indicating reduced ability to cover interest expenses. Overall, Nestle relies heavily on debt, which boosts ROE but increases financial risk. Finally, market ratios reflect how the company is valued by investors. Earnings per share dropped from 2 ringgit 65 cents in 2022 to 1 ringgit 77 cents in 2024 due to lower profits. Price to earnings ratio fluctuated with a high of 56.3 in 2024, suggesting investors are willing to pay a premium despite lower earnings. Dividend yield remained modest around 1.8 percentage to 2.3 percentage, while dividend payout ratio stayed high at around 100 percentage, showing that Nestle distributes almost all its earnings to shareholders. This indicates that the market still values Nestle's, positively reflecting confidence in its long-term stability. To summarize, Nestle demonstrates strong operational efficiency and profitability, but increasing debt levels and slower receivable collection pose financial risks. The market continues to value the companies positively, supported by consistent dividends and investors' confidence. That's all from me. Thank you for watching.
Now I'll be presenting interpretation of financial analysis. Looking at liquidity and efficiency, current and quick ratio were consistently below 1. This signals weak short-term liquidity and possible difficulty in meeting obligations. On the other hand, Nestle improved its inventory turnover, showing effective stock management. But receivables turnover declined, which suggests slower customer payments and challenges in maintaining cash flow. Next, in terms of profitability, Nestle's gross profit margin remained steady at about 30 to 31%, showing efficient cost control. However, the net profit margin fell to 6.68% in 2024 due to higher finance cost. Return on assets and return on equity also trended downward, which means Nestle is generating less return for its shareholders and asset compared to previous years. Third, debt and solvency. Debt levels are a concern. The debt ratio rose to 0.744 in 2024, while the debt to equity ratio increased from 4.08 in 2022 to 4.96 in 2024. This shows heavy reliance on loans. Interest coverage also weakened from 14.78 times to 7.48 times, which signals increasing financial risk and higher borrowing pressure. Finally, from the market perspective, earnings per share peaked in 2023 but dropped sharply in 2024. The dividend payout ratio remained above 95% throughout, which reassures shareholders with steady return. However, distributing nearly all profits as dividends limits reinvestment in future growth. Next, investment analysis. Overall, Nestle has key strengths such as its strong global brand, stable gross margins, and consistent dividends. But it also has weaknesses, high leverage, declining profitability in 2024, and slower receivable turnovers. These factors show a balance of stability and risk for investors. Next is recommendations. To improve its financial position, Nestle should focus on several areas. First, increase liquidity by boosting cash reserves and tightening credit terms. Second, reduce its reliance on debt by considering equity financing. Third, improve profitability by controlling finance costs and refining pricing strategies. Fourth, enhance receivables collection with better credit policies. Finally, the company should adjust its dividend policy to retain more profit for growth and debt reduction while rewarding shareholders. In conclusion, Nestle remains one of the world's strongest food and beverages companies, supported by its powerful brands, product diversity, and innovation. While it faces challenges such as high borrowing and declining profitability in 2024, its overall market position is stable and profitable. Therefore, we recommend holding Nestle's shares as a safe long term investment that provides steady and returns. Thank you.